this week's Sunday market update. It's nice to have you on board as always. And this week, well, for me, as always, I'll be taking you through some technical stuff because that's how I trade. And I'm going to show you initially what I'll be looking for in the upcoming week in terms of directional bias and how I'm going to make some money out of that. Then I'm going to explain to you for those of you who struggle to find whether the market's ranging or trending at times, I'm going to suggest a couple of ideas for you a little bit later. And then I'll leave you, as always, with what's keeping me awake at night. First up, let's go to my analysis for the week. I better share my screen before I do that. And there are a few options for me this week. Hopefully you guys can now see a screen that has got some currency pairs on the left and a chart that is representative of, at the moment, Aussie dollar. The chat box is open, so if you wish to ask a question or indeed let me know that that is the case, that you're seeing that screen, that would be wonderful. And of course, I'm hoping that you're hearing me. If you're not hearing me, then there's a bit of an issue, but I think everything's okay. So guys, are you seeing my Aussie dollar screen with some, or most of you, thank you, Sam. Most of you would be able to see that I've got the market scanner on. Thank you, TP. Okay, so here's what I'm looking for in terms of my, actually, I won't call it analysis. I'll call it what I see from a technical perspective may be an option to trade throughout the week. First one is Aussie versus the US dollar. Now, what I'm always looking for is something known as a key reversal bar. And this is one of those, but it's in a very, very interesting position because we've got two spinning tops back to back here. The definition for mine on a key reversal bar is a bar whose high is higher than the previous and it closed on or near its low. That's what I call a game changer bar, and I'm looking for game changer bars all the time, especially on the weekly chart, to give me a directional bias throughout the week. I've also got what I call the three amigos sitting here. So we've tried to break out, we failed. We tried to break out, we failed. We tried to break out, we failed. This is the third such failure. So hence the three amigos. And I've had a breakthrough of, I don't use moving averages to trade normally, but they do give me a directional bias. So I've got this, and this is the 21 moving average, I believe. Yes, it is. I had to check. See, I don't use them too often. But we've broken that, we've retested that. Similarly, last month's monthly pivot, and there is a resistance area through here as well. So that bias looks to be in place, and I'd be okay with that from a technical perspective or from my view perspective. The CAD yen, not dissimilar, although we haven't had a retest of this area. You can see that the pivot's been going up. This is the monthly pivot, up, 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 up. Again, we've got the three amigos sitting there, so fail, 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 and now we've dipped below that area. I expect that this will break to the downside. Perhaps it already has, and that does look to be a very bearish scenario to me. Perhaps looking for a pullback before we get excited or too excited about that. Swissy versus the yen, not dissimilar. Nice bounce off the monthly pivot, which is still going up, up, up. Very toppy. High here, high here, high here. Big engulfing bar. Broke the moving average. Broke last month's monthly pivot. I guess you could say we have had a retest there. So certainly, this is a weekly chart. Certainly on a smaller time frame, you would have seen the retest of the monthly pivot and this moving average. So this is a bearish scenario as far as I'm concerned, although the trend, as you can see, has been very, very strong. The yen being weak for such a very long time, the fundamental people will tell you, I'm sure, that there is a change afoot in particular the attitude of the Bank of Japan. So this may well be a scenario where you can get in very, very early on Swissy versus the yen. Euro versus the dollar is another one. The reason I'm liking euro versus the dollar is probably three or fourfold. I see rejection, 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 similar to what I've just described on everything else. We are at a bit of a support level, however. This one's an exponential, I think. Hang on, I'll just check that. We can answer that question, no problem. It is a simple moving average. There we go. There's the answer to that question. Why is it a simple moving average? I look at the end of the day, a moving average, as I said, I don't use them to trade, but what I do like to see is price reacting to those levels. Okay, so if it's a simple moving average or an exponential moving average, I don't really care as long as price is doing something off it. And it not really a great picture here, I'd have to say. I'd like to see price bouncing, 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 bouncing. Certainly, we've got a range here where the moving average is holding everything, but play around with it, I would suggest, and see what actually works or what's working at the time. If price is bouncing off this consistently, then it's the one you want to use. That would be my answer to that, really. This is not really a great evidence of of that happening, although it has got a little bit of form here and there. I'd still want to see it come back and bounce off there, which it has already done with this bar here and off the monthly pivot. So that makes sense to me that there is a bearish outlook on euro versus the dollar. But I also see, as I'll point out in a chart a little bit later, that there is a nice reversal pattern sitting there as well. So, and that's what I mean by price reacting off a moving average. And I don't care if it's simple, if it's a simple moving average and price is bouncing off it, then happy days. Bouncing off it here, false break off it there, bounced off it here, etc., etc., etc. Make the moving average fit the narrative or fit the chart would be my answer. If the 21 simple moving average is working or price is bouncing off it consistently, then use it. If you want the exponential side of things, then use it. To me, that's logic, and logic normally wins the day with me. So pound versus the Aussie looks to have bounced exactly off that. Interestingly, we've had a crossover of the 21 and the 200 moving average, which is the red line here. Cheers, no problem at all. I like this in terms of that bounce, that crossover. The only thing we haven't seen at this point in time is what the trend line is doing here. So let's have a look at that. We're back underneath it. So I'm happy with that. That makes sense to me. What's this pound versus the Aussie? What's the significance of the crossover? Well, what that's telling you is the long-term trend, the 200 moving average, is potentially going to be broken by, so this is support, right? Is broken by the short-term trend, which is now telling you that this little upturn here that we've had, and you have to go to a bigger time frame to see that, that uptrend is changing. That's what that's telling you. So that crossover on the weekly chart is saying that this, and it's hard to say it's bullish if you look at this weekly chart, but that bullish trend on the 200 moving average is potentially going to change. So we may be moving, if you look at the monthly chart again, we may be moving from this scenario, bullish to bearish. But as I just said, it would be nice to see it pull back to something substantial, whether that's a moving average or whether it's a trend line, whether it's a horizontal level, who cares, as long as it hits some resistance. So that's what that means to me. It means pay attention. And when I see a bearish bar like that, backing that up, that makes sense to me to go short. It's a bad area to go short on a weekly chart, but if you go to a smaller time frame, you may find something that works. And there's a beautiful what I call ABC potential pattern. So A, it advanced through the moving average. B, it's potentially bouncing off it. And we might be looking for a C down here somewhere. So that's the kind of thing that I'm looking for. It doesn't mean I'm going to trade it right now, but if I see something that gives me more evidence to trade that short, then absolutely I would look to do that. So let's continue. Pound versus the CAD. The reason pound versus the CAD is interesting to me is because we are at strong resistance. We've rejected this level many, many times before. And why are we about to break out here now is the question I would ask. So I'm looking here for something that tells me, okay, yes, we are going through this level, or no, we're not. We're doing exactly the same as we've done every single time we've come to that level. So I would look for a lower high in this area to give me a confirmation that this rally, most recent rally, has come to an end. So I'll be looking for price to go here, under here, fail to take out that high, and then I can trade it short down to the support level. So that's kind of where I'm at with pound versus the CAD. But I want more evidence than that to trade it. The other one on my watch list is Kiwi versus the yen. The reason for that is I've got a double top here. I'll call that an engulfing bar, and I'll call that a P reversal bar, this one here, higher than the previous close on or near its low. So this looks set. And of course, you've got a break and retest of that moving average again. So that makes sense to me as well. Kiwi versus the yen on the weekly chart. So they're the biases that I've isolated, if you like, and they're the ones that I want to follow throughout the week. But now I want to take you to an area. Hopefully I can get the right screen up here. So bear with me for 2 seconds. Control panel, come back, please. That would be good. Show taskbar. There. Share. Sorry, guys, this does take me some time to work out exactly how to work. Screen 2 should be the one I'm looking for. Okay, please tell me if you can see a basically white screen with the dollar index weekly chart on there. If you could tell me you can see that, that would be wonderful. I'll have a sip of Coke while I'm doing that. Awesome, thank you. Okay, so the reason I'm going here, I'm going to look at each of the major currency indexes to see if I can get some confirmation of what I'm thinking on those biases that I've already achieved or already noticed to be able to find a trade. This is the US dollar index. As we can see, and I've marked what I consider to be the key levels of support and resistance here. We've been in a box for some time on this pair. That's not unusual. That's when I say on this pair. The dollar index and all of these indexes that I'm going to look at are very heavily swayed or skewed towards the dollar. The dollar versus the dollar doesn't make sense, I know, but this is the dollar index that is telling me how strong the dollar is against a basket of currencies, right? And at the moment, what I see is strong support, 1, 2, 3 in the last, well, going back to, let's go with 12 months, right? So we've been here for 12 months and we're looking for the dollar. Well, I'm looking for the dollar to go back to this strong resistance level because that's what I'm potentially seeing here. But I'm also potentially seeing that this could very easily come back into this range and go back to the bottom. How do we judge that, whether it's strong or whether it's not? Well, let's go a little bit tighter and see if we can answer that question. This is that range that we were talking about. Now you can see what's been happening here. We've bounced off the bottom, which is around about the 96.5 level, gone to the top, back to the bottom. Beautiful, If you're trading this on a small time frame as a range trader, you should be doing very well. Back to the top, back to the bottom, back to the top. Oh, hang on. We failed to go to the bottom. What does that constitute? That constitutes higher low in my world. I also see that we've closed above what I've selected, if you like, as the top of this range. So it's above the 100 level. So it's broken through the 100. What I see here happening next is one of two things. One, we keep going and head to this area, or two, we retest or come back into this area and go back to the bottom. No shit, Sherlock. Is it going to go up or down, right? Don't you love to hear that? I love to say that. So here's the thing. I want to trade long above here or as a bounce off here and going to this level because that's my bias. My bias is long the dollar at the moment. So I want to see that happen. I won't trade this on a weekly chart because it's not yet telling, it's not yet confirming that we're going to here. So I'll be looking for this to come back, maybe daily, maybe even 4 hour earlier or later in the week to be able to trade that. But the dollar index is telling me that there's a bullish outlook, primarily because of this higher low area, and we've closed above the top of this range. I'll go to the next one, which I think will be the euro. And I mentioned the euro before, and here's why I'm bearish on the euro, because I can see a clear head and shoulders. Well, sorry, I hate to use the terminology clear because it's only clear to me. It may not be even remotely clear to you. And in fact, you might say, well, okay, hang on, this one hasn't reached the shoulder. You'd be dead right. But that's how I interpret things. Can I use the marker? Sure, I can. Sorry, I should do that all the time, shouldn't I? Laser pointer. I think that'll do the trick. So we've got left shoulder, head, right shoulder in my world. And like I said, some people will say, well, it's not a right shoulder because it hasn't come up to the box. I don't care. To me, if it looks like a duck and it quacks like a duck, it's probably a duck. So to me, this is a head and shoulders. And I do take note that we've got a very clear range here. I use the word again, clear. In my world, I've got a clear range here. What we haven't ascertained is this the bottom of the range, or is this now the bottom of the range? So I'm going with this is the bottom of the range, which gives me clear space, sorry, gives me some space for price to go back to what I believe is the bottom of the range based on this low, very, very close to this one. So I'm bearish the euro right now. This one gives me a very strong bias to say that we're going to here and potentially here and potentially here. I see this as a real chance if we can find a way into this. So I'll be looking for euro versus dollar on smaller time frames to go short. So I'm bearish the euro. Next one up. Problem with this using using the pointer is you've then got to go back to the arrow. This is the pound, not dissimilar to the euro, but a little bit different. I see the pound has broken, and we don't have this on the euro. The pound has broken this trend line and very, very near to this support level, which has been resistance in the past, support here, consolidation here, support here. What's it going to do this time? Is it going to break like it did here and go down again? We've got a lower low, we've got a lower high, we've got a lower low. We're looking potentially for this break to go short. So I'm bearish this one as well. I'm not as confident this one because we are nearer, if you like, to the bottom of the range. But don't forget this is a weekly chart, so I can still trade this short on a smaller time frame to get me into the movement, if you like, or the momentum short if it does come. So bearish again, the pound. This is the yen. Now, the yen, as always, the yen is extremely interesting. Oh, hang on, I've got a question in the box there. Mentioned euro dice short just now. Yes, yes, I believe euro dollar is definitely a potential trade. Not setting up right now, but let's see what price does in the early part of the week and see if we can get into it. This one really interesting, the yen, because we've got two matching lows here. That could well represent a double bottom. And if that is the case, then I'd be interested in trading the yen long, but I really want confirmation that that's going to be the case because the yen has been so weak for so long. So I probably want to see something here on a smaller time frame. Again, this is the weekly. So I'd want to see something on the smaller time frame to break back above this level, retest it, go towards here, get safe in the market, and then look for a break and rally on the yen. This will come into play very much on the watch list that I showed you a little bit earlier, because is that's kind of where I'm at. I'm at yen bullish and a few of the other currencies bearish. So I think that's a nice idea at the moment, but at the moment it's an idea, not a trade. Next one we're going to look at is the Swissy. Now the Swissy is very, very interesting as well. They're all interesting, always are. But this chart shows me three distinct levels. The level that we've come off, broken and retested, and we're spiraling off that level. We're now producing lower lows, lower highs, lower low coming up for sure. We've also broken this trend line, confusing my lines with my own 30-minute strategy, sorry. So I like the fact that we've broken this level. I'd love to see it retested. And then I think there's a short Swissy potentially coming up. But once again, we're at support, so we need to have that confirmation. I also like the fact that this channel is telling me bounce off the top, bounce off the bottom, bounce off the top. So I expect this to go back to the bottom at some stage. There'll be a little bit of toing and froing, I suspect, before that happens. But if we can find a nice little retest of that trend line, for instance, then there might be an opportunity to get this back down to the bottom into the 122 zone. So Swissy, I think, is a little bit bearish. This is the Canadian dollar, and that's been in strife for quite some time on the weekly chart. As you can see, it's been just waterfalling down, 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 down. It is at a support level, however. So whilst the momentum here is definitely bearish, it's very, very difficult to trade this at this moment short. I want to see it break, maybe retest, and then go that way. So it's weak, there's no question, but it is at a support level. The Australian dollar index is quite the reverse of that, pretty much, because we're getting bounce, 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 potential bounce here at a strong support level, and the bottom of this channel represents that as well. Reversal bar there, or hammer last week, or sorry, the week before last, failed to take out the low of that. I'm bullish the Aussie based on those facts. We are at a strong support level. We've bounced off it, failed to take out the low, and we're in a nice position to go long here on Aussie dollar. The Aussie dollar, the Australian dollar. Let me get that right. Kiwi. Kiwi, not dissimilar to the Aussie, which is normal because they track each other fairly closely. But it's a little bit furry, in my opinion. We're all over this level here. We're above it, below it, above it, below it. What happens next, I'm not sure. We're at support at the moment. There is a horizontal level through here as well on the Kiwi. So I'm not that strong on the Kiwi either way, I'd have to say. So at the end of the day, here's my outlook from those perspectives, I'm strong on the dollar, strong on the Aussie, and I'm okay with the yen as well, with a big, big question mark. I'm bearish the Swissy, I'm bearish the pound, and I'm bearish the euro. So that's going to dictate to me how this all plays out. So then I go back to my bias, which was based on this chart, and hopefully you can see that again, where we were looking for euro versus the dollar. So we're bullish the dollar, bearish the euro. That coincides exactly with this scenario that I said before. So I'm happy to trade the euro versus the dollar short. Is this the ideal place to go short? No. But on a smaller time frame, I could very easily look at that to go short euro versus the dollar. So that will be my bias going into the week. Pound versus the Aussie. I'm bullish the Aussie and bearish the pound. So that also makes sense. I'll be looking to trade that short if I get a setup on a smaller time frame. Pound versus the CAD. Well, the CAD I'm not sure about. The pound I'm bearish on. I would skip that one, and we are at a resistance level. So I haven't got an opinion really on the CAD and the pound. Yes, I'm bearish, sorry, but I haven't got any reason to go short here until I find a lower high. Next one, Kiwi versus the yen. Kiwi, I'm not sure about. The yen is potential, but not proven. So I'll leave that one alone as well. And as you can see, we're pretty much in the consolidation area. And that was it. So, oh, sorry, we'll go back up the top. We didn't go up the top, did we? Aussie versus the dollar. I'm bullish both pairs, both currencies, so I would not look to trade that. CAD versus the yen. As I said, I'm ambivalent about the CAD and slightly bullish the yen. So I would leave that alone, but I would be prepared to trade this short if I got an absolutely outstanding signal to do so. Swissy versus the yen. I am bearish the Swissy. It's my number one bearish. I am slightly bullish the yen, so this would be the one that attracts me more than any other. Swissy versus the yen short. I think there's a very, very good resistance area that we're trading from. It is certainly counter trend, but I think this one has got more potential from my analysis technically than anything else. So Swissy yen is going to be the one that I like more than anything else. Question: if the dollar and the yen is bullish bias, what does it mean for what? Oh, hang on. What does it mean for dollar yen? Exactly what I just said about CAD versus the yen, because I'm not sure about the CAD, and because I am bullish the yen, doesn't mean I'm going to trade CAD yen at all. In fact, it means I won't trade CAD yen until I've got something more to go on. Exactly the same applies with anything that I've got both bullish on. I would need more evidence before I look to trade it. So what it means for dollar yen is I don't know. Therefore, I won't trade it until something else happens. So you pair bullish pairs against bear. Yes, 100%. Okay, so that's where I'm at. My analysis from a chart point of view is telling me that I've got a confluence of Swissy versus the yen because I've compared those to the indexes. I hope that's clear. Now, if it's not clear, and if you're a trend trader or a range trader, but you're not clear about whether you want to trade long or short, or whether you're in a trend or whether you're not, remember that you don't like dollar. I hate dollar yen. I absolutely do, but I'm waiting to play it short. That's for sure. I think I know who's saying that. Okay, so here's where I want to go next. I said to you earlier, I want to give you an indicator that if you're unsure about whether you're trending or whether you're ranging or whether you want to trade the trend or trade the range, there's probably a few ways to work that out. But I'm going to show you the way I would go about that. So let's go back to here, hopefully here. Guys, can you see the currency bias chart that I had up before with the blue background? Yep, cool. Thank you. Here's what I want to do next. Can you trade both, or should you trade both at the same time? Is probably where I'm coming from there. Or not necessarily at the same time, but should you have both in your repertoire? Is probably where I'm going with that. Of course, you can trade either, but should or shouldn't you trade or have a system to trade with the trend and a system to trade with the range? Or should you just do the one thing? It's a great question, and it is really the trader's eternal dilemma, as I've denoted there, if you can actually read it. Yeah, it's in very, very light text. I think you should have both a range and a trend trading system to work with for very obvious reasons. The market will often give you range far more often than it will give you trend. So if you haven't got a range trading, well, that's in my opinion, and you can check through anything else, but I believe you should trade both. But how do you know whether the market's trending or ranging? Well, there are obvious signals when the market is trending strongly. And I don't think I would insult your intelligence by asking you the question whether that's trending short or long. I think everybody's aware of that. They're not the problems. What is the problem is when the market's not trending strongly and you're getting lots of little ranges before the trend continues. That's where I think both systems come in handy. And I would encourage you to, once you're comfortable with one, and please be comfortable with one before you go on to the other, is try to be able to recognize how you can range trade and how you can trend trade because they're completely different and don't mix up the two. So that's the challenge that we have. Please master one before you try and trade the other, because if you mix them up, you're going to be in all sorts of trouble. So you can use moving averages. Um, Look, these are nominal. And again, going back to moving averages, which was one of the first things that we discovered earlier, make the moving average fit the chart. Don't just say, okay, um, Harry Goose uses the 20 moving average and the 50 moving average and the 10 moving average. Why would you take their word for that? Test it. If the chart's bouncing off a moving average consistently here, 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 or if it's not, then change it. Simply change the settings to go, all right, maybe 5 is better than 10, maybe 15 is better than 20. I don't know. They're the things that you need to discover. These will be simple moving averages because I use simple moving averages. But like I said, it doesn't matter what I use. It only matters what works. So put your moving averages on the chart one by one and go, okay, this thing bounces off the 10 more than it does anything else, or it doesn't. And if it doesn't, change it to something different until you find that this is actually bouncing off the 7 moving average, not the 10, not the 15, not the 20. If it continues to do that, happy days. That's what you're looking for. That can give you the edge that you're looking for, right? You don't need to use this is just what I've got on the chart right now. It doesn't mean they are the Bible. That doesn't mean they're the key to the kingdom. Make the moving average fit the chart. That would be my advice. My God, I struggle with this. sorry guys, my control panel, as usual, when I have a, when I, oh dear, it won't go anywhere. Should I have lessons on how to drive this machine? I think I should. All I've got is my thing, this thing, and I can't change it. I'm trying. Aha, got it back. Right, here we go. You could use the ADX line. Now, you've probably never even heard of the ADX line, most of you, but this will give you a good idea if the market's trending or not. If it's above this 25 line, then the market's trending. If it's below this 25 line, the market's not trending. You can use your eyesight, of course, but you can also use the ADX line. I would recommend that if you're struggling to depict whether you've got a trend or a range. You could use for a range identifier the channel tool, right? The channel tool will go onto your chart quite easily. All you need to do is pick two highs or two lows. Pick them and pull a channel. And if it coincides with more highs and more lows, you've got yourself a channel. Just start with two equal highs or two equal lows. Not that hard. That's going to tell you that the range is in place and intact. And guess what happens? Once you've found a range, you can look for something like that. Bullish engulfing bar. Then you've got a higher low. What would you do in that situation? Wow, makes sense to me. Let's go long. You've got here a bounce off the top. Then you've got this beautiful bar here. What would you do? Hell yeah. Go short under there. Stop loss there. Happy days. Get out at this level. So there are things, there are tools that can help you identify whether you've got, here we go again. I can't find this bloody thing. There we go. Apologies for my swearing. And conversely with the ADX, Bollinger Bands you could use as well. Bollinger Bands, similar to the channel that we've just discovered, tell you that we're bouncing off the top, going to the bottom, bouncing off the top, going to the bottom. And if we're not, guess what happens? We can look to go the other way. Similarly with the ADX line, where you can pick a trend, you can also pick a range, because when it's below the 25, we're ranging. When it's above the 25, we're trending. Weak trend, I've got to say. But this is a good indicator as well to pick whether you're trending or ranging. Of course, you could use my range, which is parallels. I just use that parallel tool all the time. And if we've got, and I don't care if it's going down, up, sideways, or back to front, this is a range for me. And if I identify those two highs and two lows, then I can start trading short off the top or long off the bottom. So you could use those as well. And I still haven't got my thing back. Wow, this is so frustrating. There we go. Okay, so there are a few ideas, guys. I won't go through this, but if you want to do screenshots or whatever, I think this is a good idea to have in your toolkit. Both trending strategies work. Oh, sorry, both trend trading works and range trading work. Range trading works. Sorry, I can't get more with that. If you know how to do it. Now you've got systems to do both, right? You've all learned how to trade the trend. If you haven't got a range trading system in your portfolio, then I would suggest you learn one. It's plenty about, and I've just given you some ideas on how to make your own, frankly. And again, there's another set of hints on how you would go about doing that, right? I won't go through them because we're running out of time, but please, if you're struggling with how to pick a trend, how to pick a range, how to trade either, then here's some ideas for you, and I hope they help you. You can watch the replay of this, of course. Here are things to finish up, as always, for me that keep me awake at night. How is it even possible that wombats' feces are square in shape? Now, a lot of you people won't know that, right? It's true. I've seen them because I live in Australia and wombats are Australian endemic. So that is a fact. Wombats poo square. But here's another one. Did you know that when you thoroughly shuffle a standard 52 card deck, and I mean thoroughly, the resulting order of cards is mathematically almost guaranteed, I like this word almost, never to have existed before in human history? That keeps me awake at night because I've done a bit of that and I don't believe it. But where I do this research, it's known as a fact. And the last one, there was a roughly 50-year gap between the invention of the canned food and the invention of the can opener. How can that be? Think about it. They're the things that keep me awake at night, guys, and that is where I'm going to leave you. Hope you have a wonderful trading week ahead. Wow, what a week it was last week with all of those central banks announcing their interest rates and statements. Hope you have a wonderful week ahead, and I hope it's profitable. Keep your eyes close to the charts, guys. We will catch you later. Bye bye for now.